Can you grow a small trading account? The answer is yes. I actually did it. I turned $100 to about $360,000. Now, I don't recommend to do that at all. That was gambling. That was not real trading. And that's not what I'm going to teach you in this video. In this video, I'm going to teach you how to grow an account properly so you can make money with a very little account and you can grow it month over month. So I'm going to teach you all the things that you need to know so you can grow a small account properly. So let me just give you guys some context. Let's say you have $100, $500, and you want to grow it in trading, right? There's only two ways for you to do it. The first way is you got to gamble it. You're going to pretty much bet 100% of the account and hopefully try and take it to $1,000, $10,000, or whatever you want to take it to, which is not recommendable. And the odds of you failing are very high. And then the other is going to be a very, very slow marathon on a percentage-based growth week after week, month after month, which is the real way of trading. And in this video, I'm going to teach you the tips on how to do that correctly. And this is something that 90% of the traders in the industry do not do correctly, simply because they don't know the basis of growing an account properly. And that's because a lot of traders, they think becoming a successful trader or a profitable trader is when they turn $100 to 10,000 or turning 300 to 30,000, whatever. Actually, a crazy story is Jordan, one of my top students now, which is crazy. He, for his first 2 years of trading, he thought that he would only become a profitable trader once he turned $500 to $10,000. He was 2 years trying to do this, and he took the 500 to about 800 and to about 2,000, then he would blow it. And he would do it back and forth for about 2 years, and he never made any money. And I met him one day, and then he's like, bro, I keep winning trades, but I'm not a profitable trader because I haven't turned the 500 to 10,000. I'm like, dude, because you turned $500 to 10,000, that does not make you a profitable trader. That makes you, if anything, you got a very good winning streak and you got very lucky, and you probably took the right trades and avoided the wrong ones, but that doesn't mean you're a profitable trader. You're a profitable trader when out of 10 trades, you win 4 and then you lose 6. Those 4 trades, you win double of what you lose. So very simple example, 10 trades, you lose 6, you risk 1%, that's minus 6%. But these 4 trades that you win, let's say you win 2%, 2, 4, 6, 8. So now you have just made back the 6% that you have lost, and now you are 2% profitable. That is a profitable trader, not somebody that turned $500 to 10,000. That's not how you grow an account. You grow an account on the percentage basis on the account. And that actually leads me to my next point, which to grow an account, it is extremely crucial on the amount of trades that you take. You will be surprised how many of you guys I meet in person and you guys ask me, how many trades should I take when trading a funded account or a personal account or whatever? Should I take a lot of trades or should I take a little bit and good quality of trades? And I almost reverse the question back to you guys. What do you think makes more sense? Let's say you're playing basketball and you have a bunch of defenders in front of you and you just shoot the shot every single time from a 3-point shot and just try and make as many as you can every single time you get the ball. Or does it make more sense to wait when you are open by the free throw line or even get a shot at the free throw line and then you take your time there and then you shoot it? What do you think makes more sense? Obviously the free throw, obviously the open shot. Now, does that happen more often than every single time you get the ball? No. That's why the odds of you making a shot from the free throw line or when you're open is a lot higher than when you have a defender in front of you. What does that require? Patience. It requires patience for you to wait until you're open so you get the ball and then you can shoot it. It's the same exact thing in trading. Those good quality types of trades, they come, but you have to be patient. You have to wait for the market to give you that good quality trade so then you can take it. Just because you have the ability to take a trade every single time doesn't mean that you should. Just because every single time you get the ball, you're able to shoot it, doesn't mean that you should. You have to wait for the best quality moments to then execute on the position. And you almost have to like shift your mindset to start looking for trading opportunities, not taking a trade. A trading opportunity is an opportunity to make money. Taking a trade is just getting involved in the market just to get involved. I treat every single trading opportunity as an opportunity to grow my account. It's a business decision. It's a logical decision that's going to make me money. I'm not doing it to get involved or to entertain myself with something. Everything that I do is with a purpose and a very strict decision behind it. Not just taking a random decision because I just want to feel like I'm involved. That is actually literally how I had my biggest trading day about 2 months ago. I made $363,000 in one single trade. You think that comes every single day? No, I waited about 2 weeks for that trade to set itself up, and I waited about a whole entire week for the trade to complete itself. So I took my time because I treated it as an opportunity in the market. There's an opportunity to capitalize off of this market movement, not just a trade to click a buy or sell button to feel like I'm doing something. And how you can do this is by having the same mindset that I obtained. And that is by treating it pretty much the rest of your trading career, your trading life, as if you were to have one punch card. And in that punch card, you only get about 20 trades. There are only 20 trades that you can take for the rest of your life. I can guarantee you're gonna be very selective on the amount of trades that you're going to take. You're not gonna take any random trades. What is that gonna lead you to do? It's gonna lead you to take the best type of trades that you possibly can. In return, you're gonna make a lot more money because you're only focusing on what matters. But now, what if I doubled that for you? Let's say I give you 2 punch cards. One is going to be a demo punch card, which you're gonna pretty much have a free 20 test trades for the trades that you're going to take for the rest of your life. And those 20 trades that you test on that first demo punch card, the winning trades that you capitalize off of there and you learn from them, you're gonna take those then to the real punch card that you're going to use for the rest of your life. So now in those first 20 trades, you have just realized the ones that work and the ones that don't. So the mistakes that you made there, you don't make them ever again. Now you only focus on this real punch card, on the winning ones that you tested out on that demo punch card that I gave you at the beginning. What is that gonna create for you on this real life punch card? The odds of your success rate are going to grow so much that I wish I learned this so early on in my journey. It would have saved me so much time and so many losses. And this is not me just saying this or making something up. I actually got this from one of the best investors in the face of the planet, Warren Buffett.
I've told students if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one.
And he set the example with only 1 punch card. But then I almost was like, well, if you only get 1 punch card for 20 trades for the rest of your life, how do you know what mistakes to avoid and which ones to learn from? Well, what if you actually get 2 punch cards? 20 to test out to see what works and what doesn't. And then once you learn from that, then you go into the real market and treat it as if you only had 20 trades for the rest of your life. Now that takes me to the next point. Once you understand that you only have 20 trades to pretty much take for the rest of your life, you have to risk a calculated percentage on these trades. Now, it's not going to be 1% or 2% when you want to grow a $500 account to, let's say, 10,000. That's honestly not realistic, and it'll take you years for that to happen. The percentage that you should be risking if you're taking very quality amount of trades and very little amounts during the weeks or even months, you should be risking anywhere in between 5 and 10%. Because let's be honest, for you to take $500 to about 10,000, you're gonna have to up your risk a little bit in order for it to even make sense for you. And the risk tolerance at about 10% from a $500 account, it's only $50. So it's very doable risk, I think, for anybody that is going to get involved in the space of investing. Because let's be honest, you need money to make money. It's the realistic of this business. And keep in mind, the money that you put into this trading account, you almost have to think that it's gone, as if you already lost the money or if you already blew it. Because you cannot be attached to the wins or losses. Every single time I win a trade, I say, cool, that's the reason why I took the trade. And every single time I lose a trade, I say, cool, that's why I only risked a certain percentage of the account. You have to be extremely nonchalant on whatever outcome the trade is going to have for you. That's why the money that you put into your trading account, how I like to say, you set and forget it. Just forget about it as a whole, put it in there, treat it as an investment, and every single trade, it's an investment opportunity. And guys, please do not invest your rent money. Unless it's somebody else's money, who gives a shit? Put it in there, doesn't matter, set and forget it. And the point is, hit the subscribe button. The subscribe button is here. Hit the subscribe button on either side because we have more videos like this coming every single week. So hit the subscribe button. So now let's actually set a real scenario of what $500 can take you with a very simple win rate and a very simple percentage approach to this account. Again, this is something very realistic and very doable. So let's say you have a starting balance of $500 on your account. You're going to risk, let's say, 10% per trade on this account. So let's say you have a 50% win rate, meaning out of 10 trades, you win 5, then you lose 5. That means that you would have lost $250 on the first 5 trades if you would have lost them all in one. And then the next 5 trades you would have won. So you would have made a total of 20% on each and every single one of these trades. So you would have made a total of $500 on these 5 trades that you win. So you just made back the $250 that you just lost here, and then you just made an extra $250 on top of the money you just made back. Now leaving your account at $750. So you just scaled from 500 to 750 with taking 10 simple trades, and this could happen within a month. So now this is where a lot of traders would want to then withdraw that money or start risking more. And the answer is no. You need to stick to the same exact percentage. So if you started off the account with 10% risk, you stick with that to the account you decide to withdraw and start a new one. You cannot lower the risk, doesn't matter how many losses you take, and you cannot upper risk how many wins you take. This is crucial to having the consistent growth on the account, and you have sustainability, and you can successfully grow your account over time. So that might not seem like much because it's a $500 account, but now this is where the game changes. Let's say you add a 0 to the end of that. Well, you just took a $5,000 account to $7,500 within 1 month. You just made $2,500 by literally winning half of the time. Literally 10 trades, you lose 5, you win 5, and you just made $2,500, which is very simple and very doable in the market. And now it gets even crazier when you add another 0. You would have literally taken a $50,000 account to a $75,000 account. And notice how nothing changes. It's the same percentage, same trades, same win rate, same loss rate, same everything. The only thing that changes is the dollar amount behind the percentage. The key to this game to become successful is the percentage game. So you're literally just playing with percentages, and the hundreds, tens of thousands of dollars are going to follow. But now I actually want to take it back a step. Let's go back to the $5,000 example. Not the $500 example, because realistically it's not much, and then the $50,000 is too much. That's gonna make sense in just a second. The $5,000 is about the right point for you to pretty much leave a job and make extra income from trading where you can pretty much live from it forever. So a lot of you guys might be like, oh, but $5,000 is too much and I don't have access to that. Well, what if I told you that you can actually get access to $5,000 with 1/5 of the $500 that you would have starts on your small account? You can literally purchase a challenge for $5,000, which will cost you about $100, $120. So then if you were to pass a challenge, you will literally get funded $5,000. Like, they will literally give you the money if you are proven to be a successful trader. All you have to do is have about $100, $120 to purchase this challenge. So getting access to the $5,000 is not difficult at all. If you are a successful trader, you can purchase any account size with any of these prop firms, and you can literally get hundreds of thousands of dollars just thrown at you because you have this profitable skill set. The hard thing here is the profitable skill set. It's the hard thing to obtain for a person to master and conquer, because nobody wants to be patient and apply these simple rules on how to grow an account. This literally can apply to a personal account. It can apply to a personal account. It is literally the same percentage game. The only thing that changes on the dollar amount is the dollar amount behind the percentage of the account. And what if I told you getting access to this skill set is probably as easy or even easier than getting access to these $5,000. This skill set has become even easier to understand, and for any beginner trader to actually master it and conquer it and make trading either an added part of their income or even their full-time income from trading. This is where the set and forget strategy comes in, and it lets traders make anywhere from $1,000 to $1,500 a week using the set and forget strategy. That has made me $10 million in the last 4 years of trading. Now you're probably wondering what set and forget is, or you've never heard about it. All you have to do is click the link below and I have a video there for you that explains to you exactly what set and forget is and how it lets thousands of members be able to make anywhere from $1,000 to $1,500 a week using the set and forget strategy. And this is a very, very simple concept that is going to teach you how to grow your account from 500 to 1,000 to 1,000 to 10,000. It's the same strategy that let me turn $100 to $300,000. So if you guys want to know more about it, make sure you guys click the link in the description below. You guys watch the whole entire set and forget video so you see if it suits for you. Appreciate you guys watching this video all the way to the end. Make sure you guys hit that like and subscribe button, and I'll see you guys in the next video.